Hello and welcome to Your Business, Your Wealth. My name is Paul Adams. I am joined, as always, by Corey Shepard, president of Sound Financial Group, all-around good-looking guy, and a man who has ESP. That's right. He gets a sense. It's recent for him. Just last week, he wore the same color shirt as me, and he didn't have the same color shirt this week, so he just chose the same pattern. Corey, so glad you could be here.
I thought you were going to say I have ESP, but only for when you're about to say something scandalous.
Yeah, nope.
I'm like a Las Vegas mentalist on that one. Go.
Yeah, and that's when he gets us canceled. Give me time, y'all. I want to make sure we have a much larger audience before we're taking off this platform for berating these financial institutions. With that, speaking of berating financial institutions, we are back in the financial media today, but I want to give everybody a sneak peek to what we're going to do next week. It's something that Corey and I have been talking about for a few weeks. We haven't done it yet, is to talk about this upcoming tax reform and how it could affect you before year end. This is going to be well-researched. We're going to take a little extra time in that episode to talk about the pros and cons of some of these different policies. Fair warning. Some of you may want to pick up the phone to your congressional representatives after that one, because they are making some significant changes that will tremendously negatively impact many of the people that listen to the show. What's that?
There's a lot going on right now.
And here's the thing. These kinds of tax policies, all that stuff, it doesn't mean it's like, it's just game over and we're going to be ruined. It's like, no, you just learn what the new rules are, and then you navigate those new rules. The difficulty is in ignorance or in just being upset that it is the way that it is, instead of saying, okay, what are the new rules? Where are the boundaries? How big are the penalties? Okay, let's go. And I meant penalties in reference to sports, not you guys doing things that's tremendously illegal that's going to get you in trouble. Just let us know where the borders are, and we will follow them. All right. With that, Corey, we've got some fun articles today. And one of my favorites that we're going to get into is this idea of should I retire, and putting ourselves in the position that we would actually have a sense that we personally are ready. But something Corey and I were talking about before that I think is kind of interesting, and Corey, I'll have you take this, is this idea of the listicle. We haven't talked about that yet on the show.
If you've seen this before, I'm sure it's where it looks like it's an article that shows up, but then there's a picture at the top and just one paragraph below it, and you say, where's the article? Oh, I have to hit this right button on the picture, and it keeps scrolling, slides over for each one. And Paul knew what it was called. He's been researching online marketing a lot more than I have lately. The Listicle, I love that phrase. It's literally a play to get you to click more. So it's more hits on the site, and every once in a while an ad comes through. They knew.
It is huge. I do a lot of reading on RVs, and nearly every RV ad that you see will actually have right in the clicks of looking at the RV, it'll give you an advertisement right up front.
And those ads, son of a gun, baby gates, I've never actually Googled or searched for or shopped for a baby gate, but my wife has, and we've been talking about them just yesterday. Oh, it gets me every time. I need to have a Tupperware for my phone in my pocket.
That's right. And I don't know what it says about me, Corey, but as I think about your story you just told about what you were looking at online, all of that, what does it mean that the ad I'm showing everybody on my screen says the car that makes other cars jealous? The Mini. That's the ad they gave me. At least you got, gosh blessed, baby gates. I didn't.
Yeah, a baby gate with an 8-foot Christmas tree behind it. So
yeah, I think I'm looking at a car that's smaller than the baby gate.
Yeah.
No offense to our Mini drivers. So with that, so this is a listicle. to Corey's point. And as we look at this listicle, what you're noticing is it's like, oh, I have to click. So instead of one page view, they get a total of like 13 page views when you count the 11 points of article and the ad. And then they get a chance to push another article to you, which is always the last of the screen. But what you don't usually realize is they're totally based usually on another full article. So if you clicked through to this website, New Retirement, you would see that this entire article is posted in one screen for them. Now they're marketing some kind of software or something for people doing retirement planning. And I have nothing to say about that. We haven't researched it, etc. But these 9 exercises to help you decide if you should call it quits is what we're going to speak to. The listicle was just kind of a fun peppering on top. But it's one of the things I really liked about this article is it does a great job of talking about what your mindset ought to be or the way you might be thinking prior to retirement. So, Corey,
right, nearly every article is that you might see is something like do 5 minutes of math and see if you're ready, which is important, but not the whole picture. So I do appreciate that they have this like kind of mental, emotional side of it. Although I would like them to encourage you to do a little bit more math, but that's another, another part we'll get to.
And to be fair, most of the articles don't actually give you math that will work. Okay, so they give you a big list of quotes. And for those of you that would find this interesting, I think this would be a pretty good article to read and just sit back and reflect a little bit. Even if you're not near retirement, I think there's some fun things in here people would enjoy doing, especially with your spouse. Because it's so easy for us to get lost in the day-to-day of our lives and what we're working on in our career and not really enrolling our spouse in some of those same things. So when you look, it's like, oh, here's what these quotes might mean about you. Now, that's a little bit like those personality articles, what kind of toast are you or whatever. But but it does jostle some thinking for you. Then it says build a detailed retirement budget. Well, we talk about this. Yeah, I totally agree. The idea that you should have a good idea of what financial sufficiency and surplus look like to you from a monthly spending perspective. Because without that, you literally are aiming at a target that you have not identified. You know, when I was a kid, my family had this property up in the mountains of Colorado. We drive from the city of Denver all the time. I spent my summers in these mountains. And my parents would hand me a box of 22 shells. And they would say, be back by midnight. And with these 22 shells, they would be a quick rebrief on gun safety and a standing rule that if I killed any animal, I had to eat it. But one of the biggest parts of the safety was make sure you know where your bullet's going. And yet, how often, Corey, are people in the position that they don't know? They're sending, if you will, bullets into their 401k. They're sending money to their future, but they don't know what the target is.
They don't know what they want to end up eating from that bullet going out.
That's right. That's right.
Now, I think
incidentally, I did boil a decent amount of robins and squirrels.
It was like before Fear Factor was a thing. You had your own.
Yeah, it wasn't called Fear Factor. It was just called A Great Afternoon in the Summer.
So I think it's worth mentioning that they link in this number 2 to the New Retirement Planner, which is the software that New Retirement has created. I think that link is the whole reason the article was created.
Totally agree.
It might be good software. It's nothing wrong with them providing value, making money, but I always want to think about what was the reason, so we know.
Yep. It's always reading a book, listening to a speaker, thinking ahead of time about what is their purpose, what results are they trying to produce for themselves is always wise. You guys should be thinking that about us. I'll tell you what our purpose is in a few minutes. Think through your purpose in life.
Cliffhanger.
So the idea of like, what is it that's really important to you in the long run? This would be like lifetime purposes. And again, it's very easy to get in the day to day and forget about these things. That right there could be an amazing dinner conversation with you and your spouse. Consider how you feel on vacation. Are you one of those people that loves just sitting on the beach, or you somebody that feels like you got to be in the middle of doing something? Or if you go without a business call for a day, it's going to be, you get a little difficult to deal with or something like create
really, so, yeah, 4 and 5 is create a bucket list, are both around what is it you do here exactly.
Mm-hmm.
Like once you're not working, what are you filling your time with, which is it's important of a conversation around actively moving towards something versus rather just moving away.
Yes. And I like this one, number 6. Think about who's important to you. Envision a weekly retirement calendar is number 7.
Yep.
Create a pros and cons list. Think about what you'll regret most. These are all amazing mindset exercises, and I think could be equally applied if you're 45 years old and just thinking through your career. Even though you're not going to retire maybe in the next 2 years, you're going to get some great insights about kind of what feeds your soul, both about working and about what it would look like to not work. And assess what one more year of work really means. Now, as we look at this article, to Corey's point, and again, not going into the new retirement planner, I don't know if that tool is supposed to tell you the amount of money, all of that you're actually going to have, but that is the biggest thing that's missing. And I don't think it needs to be highly complicated, but it like point 10 could easily be have at least 25 times the amount of money that you plan on spending on a consistent ongoing basis in capital at work, because that's how much capital it takes to produce that 4% cash flow that you need to actually stave off all the bill collectors for the rest of your life while you're not working. It's like, for those of you who are not yet retired, one way to consider retirement, which we don't like that word, we prefer financial independence, and yet it is permanent unemployment. And
I get it now, like really get this article, because point 10, even though it's not labeled, is essentially click on new retirement planner and go use that to do the calculation. That is what they're after. So at first I'm like, they just forgot a part of this. Well, no, they didn't forget it. They intentionally left it off to encourage you to go down that path. So
exactly.
Can I take a crack at our, what I would say our purpose is? We promised that we talk about it in a few minutes. So I would say our purpose is to help all of you achieve all of your aims in life while achieving ours at the same time. Like we figured out if we could just really help enough people get all those things taken care of that they want to get taken care of, we could make some revenue and move our aims forward at the same time, and we could all win together. That's really what we're after.
Well, I would absolutely agree with that. But what I was going to say is my reason for doing the podcast is if I wasn't on camera, talking about this stuff on a weekly basis, I think I would balloon up to about 350 pounds. I'd be like the Jabba the Hutt of the financial world. Yeah, it would just be awful. And so by making sure I come on camera every week, I make sure I don't have seconds for dessert. But I like Corey's much better. The idea, and it is easy for us. We do love doing this content. We're always learning, so it's easy to do. And by taking a little bit of time and sharing it with all of you, there's some cost in us doing this, time, money, etc. Equipment like we're using right now. Mm-hmm. And yet we get a chance to make a difference for a whole truckload of people that otherwise may never have heard from us. Some of you have reached out and become clients. We love that. And we have also heard of many of you who are implementing these strategies and tactics in your life, and it's making a difference. That means something to us. And here's a little known secret, Corey. We haven't really talked to the audience about this before. We have found out that there are a bunch of financial advisors who listen to this show and CPAs and estate attorneys. And I won't forget, we had a guest on the show. He picked up like 6 clients from a CPA and advising firm all as a result of them hearing him on these podcasts. And then it wasn't until like the fifth one, who wasn't an actual financial advisor, who came into that meeting and to get their estate planning, or I mean, whatever they were getting done. And they said, we heard it's all been going around. We sent around your podcast when you were on that show. So we love that. Right. If we can move the needle for other advisors to work with their clients differently, especially in our last episode where we talked about how the typical financial advice doesn't always serve the aims of the people who are trying to achieve some new thing in life. So with that, Corey, you ready for the next one?
Yeah, let's do this will be a quicker stop on this article.
This is one of my favorites. The stock market fails a breathalyzer. Now, I don't like it because I like the article. I like it because of what Corey said about the article.
So it's a lot of talk about why the market is in a good spot or a bad spot, and bad spot is what their conclusion is. There are a couple key takeaways or key observations, like signs that things are wrong. It's right here in the headline. Beyond Meat, which is pretty good meatless burger. It's solid. I like Impossible a little bit better, but I'm into their technology. Beyond Meat, made with pea protein as a main ingredient, is worth more than the global market for peas. So they talk about this a little bit more down in the article. Airbnb is worth more than Marriott and Hilton combined. A couple other pieces, but I just saw this Beyond Meat. Okay. They say Beyond Meat, made with pea protein, is worth more than the entire market for peas eaten globally. Do fundamentals even matter? They're like, do fundamental basics of valuations in companies even matter? And I said, well, I don't know, because a finished good, a value-added good, should be worth more than the raw materials that went into it. So maybe if Beyond Meat's doing some amazing things with pea protein, and they'll take a little bit of pea protein for 2 cents and turn it into a thing that they can sell for $10, maybe they should be worth more than the global pea market.
Yeah, or even Airbnb. Now, aside from, let's just take away like fundamental valuation of stocks, all of that, not that we agree with any of these valuations, but to Corey's point, if all the analysis is that this thing that uses some portion of pea protein is worth more than all the pea protein worldwide, it is a comparison without meaning.
Like you just said when we were chatting beforehand, like maybe some car companies should be worth more than all the raw steel in the world. Yeah. That could probably be fair too. And for that matter, it's a different kind of comparison, but Airbnb is worth more than Marriott and Hilton combined. Why is that craziness?
Or for
more
that matter,
people are staying at Airbnb rented properties than hotels, that should be worth, like why is that a problem?
Like Airbnb both made vacation rentals easier for people that already had vacation rentals, but simultaneously created a market that didn't exist before for downtime of individual residences. Whether that's downtime because you took a vacation in Cancun for 2 weeks so you could rent your house for 10 days, or an extra market for your second home. Mm-hmm. Or in this case, people literally buying homes in vacation destinations just to do an Airbnb rental. It unlocked a whole new market that the hotels weren't even exploiting. In fact, while it's still hospitality, all that would be a little bit like saying Marriott isn't very good at building Teslas. Well, that makes sense to me because it's like their market, while it is providing housing while people are traveling, their market has never been renting vacation homes.
They also they lead off with Joby Aviation, which plans to begin an electric air taxi service in 2024. So it hasn't even sold a single ticket. Yeah. Is worth more than Lufthansa, EasyJet, or JetBlue. Well, those are all a little bit smaller carriers to begin with, but the next sentence is, does that seem right? Well, I don't know. The current market price of any stock is the market, all investors' expectation of future cash flows.
Worldwide. Billions of transactions.
So if if, electric everything is kind of the future, if there's an expectation that electric planes are going to take over from fuel-based planes, then maybe it should be worth more than one of those.
Yeah, or it's not. And people are going to lose tremendous amounts of money speculating on this venture. But what happens in an innovative world? In an innovative world, they will fail. People will lose millions upon millions of dollars. And through that creative destruction, like many people don't think about, Fisker was who back, 10, 12 years ago looked like they had a better model for building electric cars than Tesla. And they went up in smoke. Right. But all of the excitement and everything that happened around Fisker allowed for this next level of innovation where Tesla was able to take it. Like every little player moves the ball forward. So it's not necessarily a bad thing. Now, would I want to speculate on any of these stocks individually? No.
No. But the moral of this is if you see a shocking headline, like the stock market fails a breathalyzer and then...
Like Amazon is worth more than all of the cardboard manufacturers in the world.
Right. Or Beyond Meat is worth more than Global P Market. Just pause for a second and really ask yourself, is that actually shocking? Don't just think it's shocking because they're saying it's shocking.
Yeah, you nailed it. You nailed it. Like that goes into, like we talked about a few minutes ago, the idea of you need to know what the writer is working to say to you or the feelings they're working to trigger in you, which can give you enough pause. Like Corey just said of like, wait, is that really? Like you're telling me it's a big deal, but is that really a big deal? It's a great advice, Corey. By the way, guys, I should let you know that last article was Wall Street Journal. You can find that one down in the comments.
So this is a lead into next week because this is some of the things that this is talking about are going to be related to some of the moves that we can make for year end. So as we go down, tax trap number 1, the RMD. So I've had clients ask me, like we've tried to figure out if they're going to be in a higher or lower tax bracket in retirement. And I say, I can't say for sure that you're going to be in a higher tax bracket, but I can say if the bulk, like the majority of your retirement funds are in pre-tax investment accounts, it's a very good chance that you're in a higher or the same tax bracket in retirement because of required minimum distributions. So any money that's going into your pre-tax 401k, your IRA, anything, your 403b, anything that's deferred tax, you're going to be forced to take a certain amount of money out at age 72. Now, by the time those of us who are not 72 get to 72, they might have pushed it a little bit further, we can hope, but it drives you up the tax brackets just like your income does. So that plus Social Security can often mean that we're in very similar tax brackets then as we are in the last few years of our work.
That's if tax brackets don't go up to say pay for, let's just hypothetically say, the government's been doing some spending as of late. And they were doing a lot of spending before. But one thing that jumps out at me on this, and I talk about it in our philosophy conversations with clients, Corey, about the 4 rules of financial institutions. Get our money on a consistent, ongoing basis, hold on to it for as long as they can, and 4th, give it back as slowly as possible over the longest possible horizon of time. The institutions have gotten so good at implementing those 4 rules that for the IRS to convince us to take money out of these plans and pay taxes, the financial institutions got so good at saying, no, just keep all your money in the products that we offer. The IRS has had to hang this sort of Damocles above the head of every investor to make sure that you actually take money out of these products. Okay, on to number 2.
So we already talked a little bit about Social Security. Most folks think Social Security is tax-free. It is unless it's over a certain amount. Right, exactly. Right. It is unless it's not. How do I say this? So provisional income is a measure of whether or not Social Security is taxable. So you add up Social Security, half of Social Security counts toward that calculation. Any pensions that you have, any withdrawals from retirement accounts, any other income that you're earning. And so all of those things add up to just enough money, then Social Security is up to 85% taxable. 85% taxable. There we go.
Yep. And so not being aware of that.
So let's say this another way. Social Security and IRAs, the two main tools, and when I say IRA, I mean IRA, 401k, et cetera, the two main tools that the government gives us for retirement actually work worse together the more of each of you have.
That's a really good point. And keep in mind, this article is called Tax Traps, and we're thankful to Kiplinger for writing this one. But the key on that is that with each of these first two, or any of these in this article, why is something a trap is because you don't know about it when you happen upon it. It's just something to be avoided once you know about it.
Right.
They're only traps if we're not informed.
And number 3, Medicare, I don't really think of it as a trap. It's just a thing. Because, so what it says is if you pay a certain base amount for Medicare when you turn 65, and if you have higher income than $80,000 as a married couple, you're going to pay a little extra for Medicare. There's a add-on monthly amount. And by the way, they look 2 years back. So basically everybody is if you're over 80,000 of income to begin with, you're going to start at a higher rate for Medicare for the first couple of years than you probably will have long term. But we've looked at it with clients, clients that want to do Roth conversions and other things that generate a little more income leading up to 65 and beyond. And yeah, it makes them pay a little bit more for Medicare, but the net benefit is still greater for them to do so. So it's not necessarily, this one, I don't know that I would call it a trap, just a thing to pay attention to. You might want to just do it anyway. Like most real traps, you don't just walk into a bear trap and not care about it. You have to stay out of it. This one, it's not so bad if you trip it up. It's like putting a mouse trap on the floor and you step on it. Meh.
Yeah. Yep. Agreed. Well, now everyone, as you're digging in, you're doing this reading. We hope you guys are checking out these articles and we hope you keep coming back. But what I would have you do is don't forget the importance of sharing this content. You see, it's super easy for us to just, drop an episode. It's easy for me to not get this stuff posted to social media. You guys are going to see some things change around that here shortly. And yet, there are many people that you know, love, and care about. You might be a current client of our firm or just a longtime listener, but there are people in your life that aren't getting this content. And the people in your life not getting this content won't be able to be with you in the future that you're creating for you and your family. So be sure, share this on social media. If you hear something that sort of applies to a friend of yours, just text them the episode. There's that little share button in the podcast app or on YouTube. Send them a text saying, hey, about 20 minutes in, there's a great thing I think you'd get a kick out of. And let them get a chance to get exposed to this, because so much out there is hype, is fear, is greed. And what Corey and I want to be able to do is just bring you consistent content that just keeps you pointed at the future that you care about. Anything else you'd leave them with, Corey?
No, I'm feeling good about this one. Get ready for next week where we're essentially talking about more tax traps to avoid.
They're just going to be the ones that we need to avoid in the coming year and what moves to make in the current year. And with that, we hope that this episode, like all of our episodes, have been a contribution to you being able to design and build a good life.